Hi, everybody. TGIF, NFP, ABCD, EFG,
Morning, Dale.
HIJK, LMNOP, all these initials, right?
There's a song in there somewhere.
Yeah. So, good morning, Ryan. How are you?
All good, mate. You?
Good. You ready for this today?
Yeah. Rock and roll. Rock and roll.
All right. So, dollar held, right? This level.
Yeah.
Right. Failing rally, or are they going to try for par? What do you think? What are they looking for in the number?
Good question. Good question. Number, we're looking at 490, which is round about, we were 600 something last month. So a reasonable number. I think we're playing the same game as we have for the last few months. If it's not crap, it's good.
Yeah.
So we're really only going to get a move if we get a negative number or something like that. You know, anything, even something down to 150k is still a positive. I think it gets brushed aside.
Okay.
The unemployment rate will be important. You know, see if that's progressing, as long with the participation rate, more people coming into the market. Wages, obviously, as well. So as long as the numbers aren't horrendous, you know, but keep an eye on the wages, because they're expected in at 5.5%. versus 5.1% prior. That comes in a little soft. It could, you know, add to the inflation picture, that people thinking that inflation is maybe going to ease off a tiny bit, like we saw.
What do you think of this? You know, if we get, let's say, you know, better than expected number, it looks like the market is set up for that and came off, you know, your month end stuff. But doesn't this look like this would be a nice little break to buy? Maybe here at 84-ish, 83.5 in EG.
Yeah, I'm long again. I'm just trying this zone. I've got a little zone, sort of 84.27 down to 8400.
Okay. Yeah.
That's been a prior level. So I'm trying to long here. If it carries on up, then I'll add it into my core longs. But I didn't really trust the move up to 85 when it was happening. You know, it just didn't feel like it was a proper break.
Okay. Why? Why did it feel that way to you?
It just,
the grinding nature
in your bones.
Yeah. You know, euro dollar. It was driven by the euro, and the euro going up to near 112. You know, that didn't feel right. It just felt like perhaps that was month end stuff. You know, and everything going on. Yeah, it's just times when you get a feeling, you know, you've been in this game long enough.
Yeah,
now,
sure.
You
have intuition. You know, there's traders' intuition.
Yeah,
which
just don't feel
is,
something's right. Yeah,
like women's intuition.
Yeah, I wouldn't. You know, 84.80 was a fairly big level for me up top, and we broke that up into 85. And I thought, I'm not going to chase it up here. I want to be long more, but I'm not going to. I don't trust it. So I'll try this little trade down here, as I say, down into 84. See what happens. If it gets back below 83.80, then, you know, the bearish trend remains.
Okay, Blake, I heard you. That was a great call when we were up in this range here in S&Ps, and you said, quote, the easy money was made by taking out all the shorts up here. So decent sell-off in a few days.
It has been, and I happen to be short. I got short a little early at the 45.90 as we were going through it. So it's like, you know, I you know, sometimes I'm not always the best timer. You know, I know, because what I do is I focus on trying to take a position over the course of, you know, a few days, maybe, you know, a couple of weeks. And I knew we were going to be up against some resistance here, and I had to give it some room to wiggle, which I did, fortunately enough to survive getting stopped out. But now that it's up here, it's be interesting. I was, you know, I don't know if you saw the chart of the day yesterday. The Russell 2000 kind of looks like very similar type of action, where we got that false breakout and now it's kind of reversed, you know. So
there you go.
Anyway, yeah, it's interesting. It's interesting to see how the market responds to today's data. And I was going to ask Brian, do you think that today's data is really going to matter in the non-farm?
No, as I was saying today, it doesn't. As I was saying today, you know, if it's not crap, it's all right. But keep an eye on wages because of the inflationary effect. That's obviously the hot topic. If wages come in soft, that might take some air out of the inflation worries. And just look at the unemployment rate and participation rate, see if more people are coming back in. But from my standpoint, unless we get something hugely out of sync, it's not going to matter a great deal.
So the dollar is up and crude is down and Canada's down. So, it's trying, but you would have thought that would, those two things I mentioned are tailwinds and not acting great.
No,
but I guess you have to be patient here.
It's still not on that. It's still not got back that correlation, is it? The CAD and oil at the moment.
No, or with the dollar.
Playing the risk. Yeah.
Barely with the dollar. I mean, you look at Canada on a weekly basis and we don't know for sure if we've topped in the dollar, but we've had a strong dollar, and look at that. I mean, it looks destined for this, doesn't it? Unless it breaks out. I mean, look at the RSI, the RSI down here on the weekly. There's no divergence down here. It was a confirmed low on the weekly. I'm sure, shorter TFs had something down here, but the weekly doesn't.
I've been real hesitant with the dollar Canadian, trying to play it on the long side. Here, you know what? I'm going to
go ahead, grab them, buddy.
Yeah,
I like your charts better than mine anyway. I'm always relieved.
I don't necessarily agree with that, but thank you.
I'm just stroking you.
The dollar Canadian, it has been, we've been kind of monitoring this wedge, and funny thing is, and we can talk about this. This is like a bullish wedge. Bullish wedge is when you have consistent highs and higher lows. Now
ascending.
So here, just ascending to me,
triangle.
Ascending to me is like this, which eventually is a reversal.
That's a wedge.
I'm going to do something a little bit different.
All right.
You know what? I'm going to
shut up.
I'm not going to do it this way. I'm going to do it a little differently.
Draw a unicorn, Daddy.
Yeah. Oh,
that's what my daughters tell me.
So look, how about a pink unicorn? So here's a unicorn.
You know how to draw one, though, Stel.
I know by now. Yes.
Yes. That is is that a unicorn? Yeah, that's
a good effort.
Thanks.
Oh god,
its eyes.
Looks like your dog.
This looks more like a dinosaur with some kind of.
It does, a T-Rex.
That's no unicorn.
All right,
that's a T-Rex.
Crap. Where'd my thing go? No, what I was going to say is, so an ascending wedge is when you have a wedge like this where it's going up and then eventually it's going to go down, right? So let me move this over here really quick. So this is what we call a bullish wedge when you have consistent highs and higher lows, like you can see here, and then it looks to break out, right? So you got these consistent highs and higher lows. Well, if you've been around with me for long enough, I'll tell you that it's more of like a 65% and 35% chance, right? So 65% chance you go that way, 35% chance you go that way, roughly, maybe 60-40, somewhere in that neighborhood. We actually broke lower, which means that there was less probabilities of us going lower, but we did, and that's what happened. So now that that's happened, though, I have to respect the fact that we broke lower and we're below the 200-day moving average. And that's why, since we've been down here, I have not bought the dollar CAD. Now, I will say that the loonie, though, when we had this false break, which was Wednesday, I want to say Wednesday, a couple people in our chat room were buying the dollar Canadian down here at 124.50, and I was like, yeah, I don't know. I was like, man, it looks bearish, and it was breaking lower because you have to imagine this candle at some point, this big wick that you see here, that big candle was red at one point. It was red, and it looked like we were going to go to hell in a handbasket. But then it reversed. That was after the Biden administration announced they were going to release all this, or actually it was before that, maybe about an hour or two, because nothing ever gets leaked ever in the government. joking. So obviously that got leaked and then it reversed and then the announcement came and then that's kind of kept us up here because crude oil became weaker. Now, while we're below the 126 level, I still refuse to actually buy the loonie. And that's not saying that I'm going to be right. I'm just saying it's not fitting my style at the moment. But I happen to be short Canadian dollars against the euro, which isn't working out particularly well at this moment, but that's how I'm kind of playing it. Do you guys have any opinion on the dollar Canadian? I know we don't have Canadian data or Canadian jobs day, which is nice. I actually don't like it when Canada and I actually prefer it when Canada and the US do not have jobs data on the same day, because it really throws a monkey wrench in your decision making, especially if you're trying to trade the loonie. But does anybody have any opinions here regarding the Canadian?
Not much different to what you've been saying, Blake. It's in a bit of a consolidation, as you say. It's got to get above 129, 130 for the upside. At the moment, we're finding a bit of a wall down into the low 124s. As Dale said, if it cracks out the range, we're going to test those recent lows.
Yeah, I wouldn't be surprised if we, the one thing it's one thing that would scare me if I was short Canadian dollars and I just watched crude oil come from wherever we were at in the 120s all the way down to 100, and we are pushing a little bit lower. I would be like, man, why hasn't the Canadian actually weakened a little bit? So that's one thing that I do find a little concerning. Speaking of crude oil, I hear that crude was found, and naturally, tell me this
crude and gas
data tell me this news that happened overnight.
Yeah, in France, apparently big news. They found gas and crude under the European Parliament building in Strasbourg. There's a big fight going on about it.
No, Stelios, is he here?
Yeah, he's.
I'm trying to unmute myself.
He's drawing a unicorn.
I'm gonna call. Yeah, I know. I heard him unicorn earlier, but we got. So they found gas under the European Parliament building.
No.
Well, first of all, how'd they not know? Second of all, what are they? How are they going to extract? Are they going to move the building? Are they going to? I mean, but does that matter? Like right now? I mean, do we care?
It's the day today, isn't it?
What's the day, Blake?
Is it Friday? I mean, no, but honestly, I'm sitting there looking. I'm trying to wonder, does it really matter? Does it really matter?
If it was true, it would matter.
You know what matters, guys? I heard that Dean Witter will not rehire Will Smith because he violated that rule about knowing your customer. Did you guys hear that? Dean Witter will not rehire him. He's going to have to live in the bathroom.
He's not really the guy in the movie.
April Fool.
It's not him. Not him, Dale.
Oh God, I thought it was. Thought it was him when cold calling for Dean Witter.
No. By the way, I had my picture taken with that dude in real life. I got to meet him.
Keep your hands up.
Yeah. But you're lucky he just doesn't slap you upside your head there, Dale. Anyway, sorry, we're completely off topic. But what do you guys think about this? And everybody said April Fools. I mean, is that a joke? Like, is it a joke? Are you guys in Europe off Russian energy independence now that they found all these natural resources below the EU Parliament building in France?
You don't believe that story, do you, Blake?
No, I don't.
That's good. I put up this morning as April Fools. I've got a lot of people sucked into it.
All right. Anyway, okay. So, but let's look at crude though. Crude's actually, closing in on $100, and I do think this is really important support. The U.S. administration is actually very, adamant about trying to reduce, costs for the American consumer. and obviously as a result, we're seeing some weakness in crude, but I'm curious to see if we're going to see a move back below this channel and back into, there'd be the Dale's famous throwover, right? If that happens. Yeah. I mean, if we get back down here, I was talking to Tracy Shoecart earlier this week, and she's like, don't fall for it. Crude's going to be pretty buoyant this week, but buoyant down here. But anyway, I think it's something that we need to pay attention to. So what else is on you guys' radar? I heard Steve here. Steve, you got one of your, you got a really good friend of yours who's going to be here for an interview right after non-farm payroll. Can you tell us a little bit about your guest that's coming up? And then we're going to do a little bit of analysis.
People should stick around for Lars. He's going to be a very interesting guest.
His name's Lars. Yep.
Yes, Lars Rasmussen. Yes, he's going to be with us at the bottom of the hour. So he's going to have interesting stories to tell us about his career, but also things you want to hear from a financial perspective, because I don't want to say a lot because he's going to say, he's going to be better introducing himself. But
tell us who he is.
He's the co-founder of Google Maps. He has worked at the highest level for the biggest tech companies,
Okay, that's good enough. That's good enough.
And he's now into angel, investing and venture capital, and he has a very, very good understanding of what is happening in the tech world, funding-wise, economy-wise, etc. So this is where the interesting part interjects with what we do and the interest of the people that are listening in.
Right. Okay. So you guys make sure you stick around, because that's going to be a really great interview. It's really exciting to have somebody that is really that close to what's happening in the private gosh, I'm lost of words. It is Friday. Have to excuse
it's me. Been a long week, hasn't it?
It's been a long week, but it's going to be a pretty important, pretty cool interview in the next 15 minutes. But before we do that, let's go through the markets really quick, just kind of see where we're at, ahead of the jobs report, because I want to know how to trade non-farm payroll. And I'll tell you what, I don't think this is going to be a big mover today. I really don't. I think this is one of those non-farm payroll. Usually, and most of the time is some data that really I tend to be, very, I look forward to it every month because I'm very active on non-farm payroll days usually, but right now it's not as important as the inflationary data that comes out, and obviously interest rates as well. So as far as the euro goes, if we get some strong data, like if the jobs report comes in, much stronger than expected, inflation data is really strong. We could see the euro push below this 110.35 level. This is a 618 retracement just of this last move higher. And you can see how we are respecting it. And we really have all through the European hours and through Asia. And it's a breakout point here. So if as long as the euro is trading above 110.35, that's supported. It gets below 110.35, I believe we will trade right back below 110, back into the 109. So, just from an intraday perspective, I think the stops are going to be building below 110.30 if you're trading the euro. That means that the dollar index, is firm. And you guys know that as long as the dollar index is above this 97.70 level, there's no real reason to be bearish the dollar index. We're in a nice bullish channel, but this is the 38% retracement of this big move higher. And it is also, you can see this trend line, black trend line through here, right? This is all very important support for the dollar index. The dollar index gets below there. I do think that the euro has a green light to trade up towards, 112.50, 113, somewhere in that neighborhood. So let's keep an eye on the dollar index. I'm going to take your attention over to the S&P. So as I was talking a little bit earlier with Dale, the S&P, and you guys know, I talked a lot about this on the trade-off show that I did with Pepperstone Securities and Chris Weston the other day. I told everybody, hey, that this is a failure up here. This was enough to stop out all the shorts, and we overshot where I thought we were going to go. I thought we'd stop at the 200-day moving average once we completed this double bottom that you can see here. It's in blue, right? That double bottom. Once we completed that, I thought, this is going to be it. And there's the 618 retracement, all that other stuff. We went far enough just to create a higher high and to stop out every short. So now I think the door is open for the S&P to actually trade back to the 200-day moving average, which is down here at 4,500. So any rally intraday back up to 4,580 should probably find some selling interest. So just remember, if you're long, like I always try to put myself in the position of people that are opposite of me, right? That's my go-to, like, default. How am I going to approach my trade? How are other traders thinking about their trades? So I say, well, if I was long and I got caught on the long side chasing this market higher this week, and I own the S&P and it's above 4,600, let's say I own some spiders or whatever, and I'm like, shoot, man, did I just got stuck holding the bag? I'm going to say right now that if it gets back towards 4,580, I'm happy to get out. I'll gladly take my loss if I got caught chasing above here. And if I don't want to hold it into the weekend, depending on, what's going to happen over the weekend, whether there's, further escalation by, Putin, whatever is going through your mind. I just think longs are going to be looking for the exits now anywhere up towards 4,600. So you got to use that to your advantage. If you guys are predatory as a trader in nature, looking to sell rallies up to 45.80 seems like a logical trade. And then technically, if you just look at it, this is what we call a bear flag pattern intraday. So, the risk is that we're developing a bear flag pattern to, make a continuation back down towards 44, 60, 44.70. One other thing I wanted to cover before we go into the jobs report, I just want to take a look at precious metals, because they tend to be things that do move. When the data hits, as far as gold goes, I have zero interest in gold while it's in between this range, which is, by the way, if you guys don't know this, we have this head and shoulder pattern. It's complete as far as I'm concerned. If you're a ForexAnalytix subscriber, we do the morning edge every day, and we go through all of these instruments, top-down analysis, kind of like what I'm doing right now with you. We do it for all these instruments in about less than an hour's time. We do it every trading day, just so you guys know that. But anybody who's a ForexAnalytix subscriber already knows my opinions here. 1875 to 1960. That's kind of your near-term range. I know it's 1975 up here, but you can see we've stopped shy of that. I actually think that's a bigger, more important resistance. I'm just keeping the other trend line up there just because I think, just in case we do probe, we could. It's not an exact science, so that we have to kind of get up there and play around in those areas. But anyway, gold I think could see the either side of this range. Following the jobs report, strong jobs report, or you can actually say that the inflationary data that comes with the jobs report, as far as wage data, that's probably going to be more of the mover here in gold. But it's going to be opposite of the dollar. So just however the dollar responds, gold's probably going to be the opposite of that. 1960, 1875. Now, one last currency I should cover is the U.S. dollar, Japanese yen. I know a lot of people were looking for the middle finger pattern. If you guys don't know what the middle finger pattern is, it's what the bulls got this week, right? You got there's a part of your hand. There is the middle finger pattern, right? It's like right there. But the fact of the matter is the dollar yen is stalling at the 38% retracement right here. You can see the 38% retracement. If we do take that out, we might actually get back up towards the lower end of this resistance zone that we've been talking about for the last week or so. But anyway, that's kind of how I'm looking at the dollar yen, and a break below 121.30, which has been key support for us all week long. If we break below that, that's gonna usher in some yen strength. All right, guys, anything I missed there? Ryan, Stelio, Steve, I'm not sure if K-Man's here, but
yeah, you did miss something pretty big actually.
Stelios's big call on
no,
silver.
no. We got Eurozone CPI today. You see, that's 7.5% year on year, up from 5.9 and expected 6.6. And the euro sold off on that number. Now you tell me how that works.
But that's not enough.
It's not just the euro though. It's a bond which rallied on the back of that number. You tell me how that works.
And that's not enough, Stelio, to get the European Central Bank, which has a single mandate being price stability, to move from negative nominal rates.
Yeah.
Go figure.
All right. Well, I'm glad I didn't miss that. And so you guys have an inflation issue, from what you're telling me. Do you think?
I think the proper answer to that is no shit, Sherlock.
Do anything about it? What's that?
And you know what's funny? You know what the ECB forecast in December for 2022? 3.2%.
Yeah.
I love it. I love it. It's hilarious.
Yeah. How did you get a job there?
I guess you have to prove that you can be wrong a lot more times than you can be right before you can apply.
Okay.
All right. Well, I just heard Grega's voice. Grega, we got 4 minutes before the data hits. What's going on in your world, Mr. Horvat? Do you have any Elliott wave setup that we should be looking at that's maybe posted on the ForexAnalytix site that I can show people, like, maybe a current count of the euro dollar or something that you
exactly this. I think that euro dollar is still just going to correct here, and that we could see more weakness, especially if today we will see a close below that trend line connected from below. So I think that next week we are going to selling further.
What? So you think we're heading back down towards like 108 or 109, right?
Yeah, it depends on the close, but yes, generally yes. I still think that stocks have made this nice retracement, as you discussed earlier, reversal after completing that 5-wave move. I talked about this in week ahead Vida, and looks like that there is still this correction going on. So further weakness on stocks, I think, will also be easy call for bears on euro.
All right. Well, that comes from the Elliott wave. What do you call them? The Wizard of Waves, Dale, right?
That's it. Yeah,
the Wizard of Waves. So thanks, Greg. Do you have any other opinions about where the S&P is at, especially with the S&P? I'll pull up your chart really quick. With the S&P currently, apparently this is what your view is. Has your view changed from what you posted on the ForexAnalytix site here?
No, it's actually still, you see this key support level for bulls. I think that this one could be retested, 44.20 around there.
Well, it makes a lot of sense. I mean, if we trade down to 4,400, following the data, or let's just say going into the next week, that would make sense that the euro trades back towards, back below 109, or below, towards 109 or below 109, back towards 108. So that would make a lot of sense to me as far as the dollar goes. Great. Hey, thanks for jumping in today. Just remember, guys, if you have ForexAnalytix, Grega is our Elliott wave analyst. We also have, harmonic patterns with Andre. So you can see different harmonic patterns, different types of analysis. We just, we try to break down everything from macro, candlestick, basic technical analysis, harmonic, Elliott wave. It's not always going to all match up, but, you kind of look for confluence in analysis, and it gives you different viewpoints on how, different methodologies are viewing the markets. Now, we do have, like I said, data coming out. So we're going to open up the data flash, which is going to give us that data as it's coming out. This happens to be faster than Bloomberg in a lot of instances. We've got about 30 seconds to go. Any last minute words from you guys? And
good luck. Stay safe.
Good luck.
Yeah, that's one. And also, I assume we're going to have another average hourly earnings year on year that's going to be hot, but not as hot to catch up with inflation.
We're going to keep. Did I just hear a cat?
Yeah, that was my cat. One of my cats, as usual.
All right. So we have
disagrees with you, Steve.
We have the S&P over here and a 15-minute. These are 15-minute candles. We have the dollar yen, 15-minute candles. Just see, and then you're going to see the reaction to the data. All right, let's see it. Whoa.
There we go.
All right.
431.
431. All right. Damn.
Average hourly earnings slightly higher, just like Mr. Volgi said.
Yeah, but lower than inflation, substantially lower.
Average hourly earnings came in line, or actually average hourly earnings ticked up.
Yep.
Year over year. Well, not monthly, but year over year. Wow. Okay. And
Good unemployment
so the dollar
rate.
yen's a little responsive to that.
Yep.
We're seeing some dollar strength come through the market. S&P
Unemployment rate dropped with participation rates rising as well, which is good. That's pretty good.
Yeah,
good.
it's just
Nothing to see
it's
here.
not a huge reaction today. Just not a real big. And as I mentioned earlier, I don't think the dollar is going to have a huge reaction off of this data. It's just not. So, what I'll be looking for going into North American trade, I'll be watching the euro, just making sure it holds above 110.35. Because if it does, we could trade. The euro could see some short covering into the weekend. You might get it trading back up towards 111. Obviously, I don't think it's going to be a big mover today, but and then we'll see if Grega's prediction of a move down towards 109, 108 comes to fruition moving forward. So remember, guys, if you haven't tried out ForexAnalytix, make sure you do so. But I need to mention, if you haven't registered, you have to do it this weekend. Do it this weekend. This is the biggest event of the year. I've had people come to me say, Blake, the speakers that you guys have put together is better than any other company could do, hands down. You should see all of the great speakers coming in. It's somebody is speaking that will fit your interest, no matter if it's cryptos, stocks, the Fed, gold, whatever. So make sure you guys do register. I'm going to go put the link right in the chat box. It is free to attend, and seating is limited. Especially seating is limited for the live, when you want to be there live and you want to be there to try to ask questions to Danielle DiMartino Booth or Peter Schiff or whoever you want to talk to. Seating's limited. We've had people not be able to get seated. All right, and it is virtual, but it's being able to be listening in. So register. Steve, I know your friend Lars is here, so I'm going to pass it over to you. You guys have a great weekend, and there you go, Steve. It's all yours.
Blake, Dale, Stel, as I said before, you're more than welcome to pitch in.
Sure.
Okay. Lars,
I'm going to stick around. I'm just not going to turn the video on. It's still like 5
o'clock. It's 4 o'clock in the morning for you. I know.
Yeah.
Hey, Lars.
Hello.
Nice to have you with us.
It's a pleasure. What a lot of numbers you can cram on one screen. I came in just at the tail end of the previous speaker.
Yes. It's the first part of our webinar. It's all about the team talking about the financial markets, news, etc. And at the bottom of the hour, we have an interview almost every day. Let's say 4 out of 5 days. So in this case, you are the guest of honor. So what Dale, our host, usually does is he asks people to tell a few things about themselves. So I guess that's where we can start with you.
And by the way, before you do that, I just want to say nice to meet you, Lars, and thank you for joining our community today.
That's my partner, Blake, by the way, Lars.
But yeah, no, the screen told me that was Blake. So, me, I was born in Denmark, spent a long time in America, as you can probably tell from my accent. Now I live in Greece, so I know Stelios. I guess I'm an angel investor, which does my sound no good? Can you hear me?
If you there is a little bit of an echo. If you can plug in an actual microphone or a headset, would definitely help a lot with the quality of sound, Lars.
Bear with me, see if I can
Yeah, absolutely, mate. Absolutely.
Yeah, Lars, the weather looks beautiful there. I like the trees blowing through.
I highly recommend moving to Athens if you're into hot weather and voting on the islands and so on.
Lars lives in a very, very nice area next to the school our kids go. That's how I met Lars, actually. His lovely daughter is a schoolmate of my son's. Let's give him a second to connect his headphones.
Yeah, you guys keep talking.
Yes, absolutely. So he lives in a wonderful area, and I have to say, Dale, that we've had unusually cold weather during the past few weeks for Greece, but now since a couple of days ago, we've gone into full-blown spring. Yeah. So it's finally here with us.
Yeah, looks like Southern California, kind of.
Just like that. Can you guys hear me?
Yes, we can.
Let's see, I'm not quite sure.
Yeah, just choose at the bottom left where it says mute. It has a little arrow. It has all the audio settings, so you can switch your audio to your current headset.
Yeah. Now you're in my headset.
Oh, that's much better.
Too.
Perfect.
That's very good.
So Lars, why don't you tell us a few things? Why don't you tell us a few things about your first career and what you've been doing now?
Yeah. So look, I'm a computer scientist by training. I PhD from UC Berkeley a long time ago, and then I joined the startup scene in Silicon Valley back in the .com bubble days. Gosh. This is my third bubble bursting. I mean, not bursting. I mean, I don't know what's about to happen, but yeah, I joined a startup that died in the .com crash, and then I started my own with my brother that did mapping technology, and we sold our little outfit to Google before we launched. Actually, we were just 4 engineers and a prototype and some patents, and that turned into Google Maps, which we're super proud of, and still by far my most successful. Oh, I am. Thanks, Blake.
I'm an Apple user, and I refuse to use Apple Maps. I only put Google Maps on my iPhone. So,
well, thank you. I appreciate that. And so that then I worked at Google for a while, and then I switched to Facebook, which is a very common Silicon Valley career path. There's like a conveyor belt outside of Google that takes you over to Facebook, and I worked there for 4 or 5 years, and then I tried my hands on entrepreneurship again. I started a music tech company with my wife, who's Greek, which is why I ended up moving to Greece. And that startup's still around. It hasn't quite taken off yet. We actually just handed it over to a younger team to lead it, so that we can focus on angel investing. And so I joked that if you can't do, you invest. And that's kind of what we've switched to. We started angel investing very slowly a decade ago. And those first investments, the ones that didn't die, are now starting to show great promise. In fact, probably my second proudest professional achievement is that I helped start a company in Australia called Canva. That was these 2 kids from a mining town in Australia that wanted to build better online design software. And I got introduced to them by a bunch of kite surfing crazy techies that I know that likes Australia because there's good kite surfing. And I helped them build a tech team, the first tech team. Like the 2 founders were not software engineers. And so I helped I put some money in their seed round, not a lot. But that company is worth $40 billion in their last.
It's amazing. Lars, my wife has been using Canva for her small business. She's a retailer, online retailer here in Scottsdale, Arizona. She's been using Canva for like 5 years, and it's crazy that it's developed by 2 young kids out of Australia.
2 young kids out of Australia.
Say hi, Lars.
That is wild. Wow.
They were they were like in their early 20s when we met. A couple, married now, and it was just a crazy story. I mean, they had something. It's this weird thing you can't put your finger on it, but they had something, and they had built a little company bootstrapped in their basement that did design software very specifically for yearbooks for schools, and they built that on their own. It was small business, small niche, but they really kind of got their appetite up. And then they ran into some Silicon Valley folks that came by Perth, the mining town in Western Australia, because there was excellent kite surfing there. And then they started learning about the Silicon Valley approach to startups, and they got hooked on that. And we ended up helping them, with their pitch, with how to structure a Silicon Valley thing. And my particular job was to help them build a tech team. So I'd actually, it's a long story, but Google Maps was kind of created in Australia. I love Australia. It's my second favorite place in the world after Greece. And we did most of the work there. And I started Google's engineering office in Australia, which was the first person to join as an engineer, and it became, I think there's like 1,000 engineers working there now. And so I had access to the best engineers in Sydney, and so I could help Mel and Cliff hire some of those people, because we met just as I was exiting Google, and it just became this phenomenal success. Blows my mind, actually. And I often look at, so now I've done maybe 60 or so angel investment, mostly like first money in. And a lot of those have died, and some are starting to take off now. And I try to look at what I knew when I invested, and only what I knew when I invested, right? And trying to see patterns of who is successful. And I swear, those two would not have been my pick if I just lined them all up and imagine I had the same information at the same time about everyone. And it was quite an amazing thing. But looking back, the things that they had that really stood out was this incredible tenacity. Because they didn't know much about the space. And it took 2 years from when they first started engaging with the Silicon Valley folks. I got maybe a year later involved. It took maybe 2 years before they actually had a company and they started writing code. And in those 2 years, many times any normal person would have long since given up, and they just would not give up. And a lot of these interactions were done on a beach in some exotic location like Hawaii, where everyone's kite surfing and partying. And these two guys, who happened to be very good looking and young and so on, they were always in the room working. We were on the beach partying, they were in the room working, always, always, always. And they would just not give up. And then the other thing is the space they were in had this unique property back then, which is very different from most of the kind of subject matters in tech, which is online design or digital design was completely dominated by Adobe. There's this one incumbent that had bought or out competed everything in the space. And so most people stayed away from that area because it's game over. Adobe just runs the show. You can't beat that. And Mel and Cliff were yeah, but their products suck. And they knew that because Mel had kind of made her pocket money when she was going through school in Perth by teaching people how to use Adobe tools for exactly the use case, Blake, you're talking about. You're working with small business owners needing some graphical design for the business. Right. And they would come to her and spend 6 months learning how to use Adobe's tools. And then they would spend $2,000 on buying the software, or they would find it free on the web, right?
It was crap,
just to make a flyer. Yeah. I mean, for that use case, I should say, right? That these are tools that are really made for the professional designer. But it turns out a large amount of the revenue back then came from people that profoundly didn't need that kind of power, right? They needed something much easier to learn. And Mel is there's got to be a better way. And then they kind of tested her theories with this yearbook niche thing, right? Where a teacher would go on their product and they would just design a yearbook through various templates and choosing colors and putting all the pictures of the students in and the funny one-liners, right? And then they would actually produce the books and send it back to the school. And through that, they really learned what kind of user interface should you give to someone who cares about design, but they're not a professional designer. And then that's what they took out to a much broader market with Canva. You can design anything.
It's I think Canva. Every YouTuber on YouTube uses Canva. I think
it's incredible. And they're just good.
What a success story!
Like I said, it's crazy. And I like to think it's kind of of the 50 companies, 60 or so I think now I've invested in. It also it's kind of funny. It's one of my smallest investments ever in dollar terms. I wish.
Of course, it's never the big one, right?
Right. Of course,
we say that in trading too.
It is the one. It is the one that I put the most sweat into, and I'm super proud of when Mel tells her story. You know, she like their company is one of the like top 5 in market cap terms private software companies out there.
Wow.
And so she gets a fair bit of press time, and I often get a kind mention that I played an important role. You know, there were 2 of them. There are actually 3 co-founders, and I introduced them to the third one, who's someone I worked with at Google, who's kind of both a software engineer and a user interface designer. Cam Adams, he's incredible, and landing him took like almost a year from when I first introduced him to the joint, because he left Google and started his own startup, and it's very hard to like recruit someone who's just founded their own startup into someone else's startup. Although I think he could tell from the minute I introduced him that this was like a better thing for him to be involved in.
I was going to ask, you know, you play, I mean, a lot of those roles in Silicon Valley, and obviously you were there and you lived it. A lot of it is relationships, right? It's like who knows who and who can match people up with the best person. Right. And I got to ask you, have you watched? There's a show that's out right now. I believe it's on Showtime. I forget whatever my wife has me subscribing to these days. It's called Super Pumped, about Uber.
Super Pumped.
Oh my gosh.
I haven't seen it.
Oh, you've got to see it. It's the actor that does it is phenomenal. Anyway, I think it would be interesting to hear your take about this depiction of what happens in Silicon Valley with Uber specific case, how he took engineers away from Google, and it's interesting. It's such an interesting story. But I guess the question I wanted to ask you is how important is it to know the right people in Silicon Valley? And is it a big city? I mean, a big little town, if you will, or is it a small, big city? I forget how you would say that.
No, I mean, everyone knows everyone there, right? And like when we did our maps thing, we weren't connected to anyone, and we'd been part of this kind of failed academically rooted startup, super technology. Crazy. Actually, you all use it every day. You don't know about this because we ended up selling to Qualcomm that does most of the chips in our phones, and the data that gets sent is actually encoded with the technology that this startup had like owned. There was a professor at UC Berkeley who started. But we were academics. We didn't have a lot of business sense. But we met one guy. My brother and I both worked there. We both got laid off when the bubble burst and this company ran out of money. And there was one guy that we'd met like once or twice. He was on the board of the failed startup. And once we got our prototype and mapping up and running, we gate crashed some panel event, sort of like this, but live, right, that he was in. And we're like, hey, you don't remember us, but we were these guys at that startup that failed that you're in. And from that one guy, we got all of the connections, 10 different VCs that all turned us down, and one VC that almost invested. You go through this funnel, and I kept asking them, how far are we in your funnel? And we got to the 70% mark. So like we got to a place where they invested in 7 out of 10 startups that got there. But we became one of the 3 they didn't invest in. But by the time we're done with that process, they had introduced us to a number of people that they thought would help us out if they invested. One of those guys, Ram Shriram, happened to be on the board of Google. And he's like, look, the same reason Sequoia, oops, I mentioned their names. I love Sequoia, actually.
That's a big name out there.
It was very exciting that they almost invested, but they introduced us, and they were very square about it. They didn't in any way, shape, or form renege on a promise, right? They were very clear. Look, you're at the 70% mark. They even explained which startups end up being in the 30% that don't get invested in, and it's either that a bigger company turns out to be doing something in their space, which was what killed our deal, that Yahoo was doing stuff in mapping, or they find something wrong where something has been misrepresented by the entrepreneurs. That was not our issue. Anyway, so we found that in that 30% category, and they didn't get the investment. We're bummed. And we had, by the way, we had told everyone, sort of through our lawyer, that Sequoia wanted to invest in us. And you get this thing called the blessing of Sequoia, where everyone else wants to co-invest. And Sequoia was cool with us playing those cards, and they warned us, but there's also a curse. If you fall on the other side of that 70-30 divide, it's very hard to explain why we didn't invest. And that played out. Everyone knew.
Everybody's like, well, why did you fall into that bucket?
Right. And then it was all over. No one would touch us. But Ram, he was like, look, the same reason Sequoia ultimately decided not to invest, which was that Yahoo was rummaging in the mapping space. That same reason is going to make Google want to buy you, because Google has nothing in this space. Google really loves the idea of leapfrogging everyone. You have this much better thing that just kind of needs the resources to become much better than the MapQuest and Yahoo Maps and Microsoft Maps that was dominating back then. And so he introduced us to Larry Page. And so, like from this one guy we knew from this failed startups board, CEO for Change Later, we're meeting with Larry Page. And he's like, I like what you guys are doing. And then they bought us, which was fantastic. And then our prototype, instead of becoming an independent product, we spent like 9 months turning it into Google Maps, which is a phenomenal ride.
That is awesome. I mean, I can tell you, like I said, as an Apple user of, I don't know, a decade or whatever, I refuse to use Apple Maps. I hate it. I loathe it, and I just go directly to Google Maps, and it's the first thing I do. That's the first thing I load on any phone that I've ever gotten for the last decade.
The fun part, Blake, is that Lars also uses Apple products.
Yeah, and I saw his iWatch, so yeah, I figured he probably falls in the same camp as a lot of us people that have adopted iOS. The not technology, I want to say the biosphere, but that's not even it. But we've adopted all the Apple technology, but I still refuse to use their maps. And
Lars, your brother worked also for a moon in Apple. Am I correct on that?
Yeah,
right?
So we left Google at the same time, and not by design, went to Google's two biggest competitors. I went to Facebook, and Jens went to Apple, and actually Jens specifically was like, "Hey, I know a little bit about maps. You guys seem to be struggling." I'm sure he put it very diplomatically, and so they brought him on board to try and help them. And a couple of things I want to say about Apple Maps is one thing is that it was one of the highlights of the Google Maps success that the original iPhone, before anyone could write third-party apps, came with a Google Maps app built in, and that just and it was blew my mind. And actually, interestingly, my brother and I didn't even know this was happening. Wow. That Apple's secrecy, that Steve Jobs was still around, and his secrecy was so intense that we couldn't even know about it. And Eric Smith, who was the CEO of Google back then and sat on Apple's board, one day he was like, "So hey, you should check out Steve Jobs when he's on stage. You're gonna like it." And that's how we found out that Eric was like, "You should look at his presentation." And there's our baby on this magic phone. And it was funny because we'd always talked about, for maps really to take off, you need it in your pocket. And but no one had made a phone that made that viable. Actually, before the iPhone, Google Maps, we had a ton of different apps, a ton of different phones, and we were by far the most downloaded mobile app of its day, and nobody used it. Like when we look at our usage graph and compared web browsers to mobile phones, you couldn't even see mobile phones until the iPhone came out. And within months, suddenly you could see that graph, and we could plot out when they were going to cross over. And of course, now it's the web graph that you can barely see.
What's interesting, Lars? I got to tell you this, just it ties into the way I know Steve and Greece. So when I met Steve in person, which Steve, how long ago was that? 8 years ago?
7 years ago, something like that. Yes.
Yeah, and the thing about cell phone technology at that point in time, especially when you travel outside the United States, it wasn't as proficient. Like I had to call to get, international. It wasn't, just easy. Right. And so I used to just connect to the internet via, wherever, I was getting coffee or when I was in Athens. And my son was being baptized where my wife and I got married on Milos. Yeah, and so I swung by to meet Steve on my way out of the country, my sister and I. But you know what's funny is I actually always ran Google Maps on my phone, because no matter where I was at, I could see myself on Google Maps, even if I didn't have internet connection at that point in time. That was like 8 or 9 years ago. Isn't that wild?
All right. That is wild, yeah. What kind of phone was this? This was an iPhone, an early iPhone?
I can't remember, but it was like I just downloaded. I just started using Google Maps at that point. So yeah, but I remember looking at Google Maps and saying, I'm walking around Athens with no cell connection, you know, but I could see myself on the map, so I knew kind of where I was at. So it was,
right.
Awesome.
So, Blake, I think Lars is the perfect person to have here for him to answer a few questions. He's been in the in and outs of the tech startups and angel investing, as he said. So it's a discussion we've had when we were on vacations and prior to this. I think it's a good idea to get his take on where he thinks we're currently in the cycle. He already mentioned that he had been there in the 99-2000 tech bubble burst. He was there definitely in the 2008-2009 financial crisis. Lars, from your side of the river, how does it currently feel? What do the people you work with, etc., think about what's happening at the moment? Has liquidity obviously started drying up? How does it feel to you?
Yeah, no, it feels like there's a really high chance of a similar kind of rapid downturn in terms of the availability of venture capital for tech startups. And it hasn't quite happened yet, but everyone that I work with are preparing for this and kind of freaking out. And which is, well, on the one hand, it's too bad, it's a distraction and so on. But on the other hand, I always like to think that my biggest success with Google Maps, actually, it started at the bottom of a downturn. And I think actually you'll see that that's not a total coincidence, that there is definitely a case to be made that when things are tough, people are more willing to do their own thing. And in fact,
it's not only that, if I may, Lars. You know, Austrian economics believe and have coined the term malinvestments. So the idea about it is that when you have a bubble, what is happening is that there are a lot of malinvestments happening. Malinvestment is, in essence, when capital, right, land, and labor are getting directed in their own projects, right, for their own reasons.
Yeah.
So after malinvestments are being destroyed at a big extent through the natural economic process of having a recession, then you have the economy pushing those resources in what is actually worth it, right? So from an economic standpoint, that is how I would interpret what you just said about Google Maps.
Yeah, exactly. And then the way it felt from being inside, right, the startup that failed had been malinvested. Cool term I just learned, right? So money was too easy. We raised too much money in the sense that we ended up building up way too much burn rate relative to the market fit we hadn't quite found yet. And when that money dried up like this, it was super painful to get rid of that burn rate. And conversely, when we were there, my brother and I and 2 Australian mates that joined us, there were several times when we probably should have given up. Most people would have given up. And on one hand, I'd love to say that we had that same kind of tenacity I saw in Mellon Cliff on that beach in Hawaii. But a lot of the truth is that no one was hiring. Like no one was hiring. Well, Google was hiring. And we did have a semi-serious discussion. Should we just give up this thing and just go get a job at Google? And we decided not to. But it's quite possible that if it had been boom times, we would have gone and gotten a job somewhere. Anyway, so what does it feel like now? It feels like we're about to see the same thing. that companies have raised a lot of money and build up a burn rate that's unsustainable without access to really easy venture capital are about to face some pretty rough.
I have another question for you. I want to see, from your perspective, in what percentage do you think that this environment of too easy money, negative real rates, has cultivated, in essence, an environment that a lot of startups, instead of being the product of some people that have a dream, are now more of an opportunistic attempt to, suck some of that liquidity up without really caring about, the end goal, success?
I don't know.
Have you actually seen this, in front of you happening, or
No.
you still think that the people that are doing this are still idealists?
No, I don't. I have never encountered someone who did that. What I think happens is that it's a couple of things. It's intoxicating when someone offers you lots of money with little effort and at high valuations and so on. But there are also examples of competing companies where the winner is the one that raises enough money, in particular in kind of the more capital intensive spaces like hardware. Like I think if you compare GoPro to some other companies that were building cool cameras at the same time, GoPro is like all the deep stuff inside does not come from GoPro, right? They came from chip manufacturers that would sell to anyone. So there are a lot of companies trying to do this, and I heard actually an analysis from one of the companies that lost, that he was like, we didn't raise enough money, and the other guys did. We were being conservative, we were afraid, we were being conservative, and the other guys didn't. They just outspend us, right? And it worked. That they were able to, GoPro was able to get to a point of being a self-sustainable.
So in essence, we go to a point that being conservative, which at the good old times was the prudent thing to do, was a negative. Actually, it reduced your chances of, competing, right?
Yeah. So you can fail in both ways, of course. You can fail, and we've seen it a bunch, right? With Softbank is kind of famous for coming in and saying, look, here's a space, and where there's a bunch of neck-on-neck competitors, and we're just going to pour extraordinary amounts of money into one of them and just tell them to outspend the other guys, right? And sometimes it works, and sometimes it becomes some pretty spectacular failures. Isn't there also, like you were mentioning, I think about Uber. I think there's a series out there about WeWork too, isn't there?
Oh yeah, I have not seen that one. Just the Uber story is just so interesting to me, Yeah. And Travis Kalanick, yeah.
I don't know much about Uber. I had a few friends who worked there who seem to indicate that the kind of cultural issues that got talked about a lot were somewhat
very toxic, from what it seems like.
Yeah,
and I remember reading a lot about it in the news over the years.
So it's interesting. Like my impression of like the culture inside startups can actually be dramatically different, and I think like the culture inside Canva is the diametrical opposite of the culture that I sense from the outside in a company like Uber. It's very different.
Oh, hey, Lars, this is Dale Pinkert. Nice to meet you. Enjoying hearing your story. It's inspiring. Can you tell me how
Lars?
Can you tell me how a guy, I forgot his name, the guy from WeWorks, ended up in a position like that and attracted all that capital? And he thought he was the Messiah, kind of looked like him.
Look, I don't know. I don't know the inside. I don't know the inside of this. Only what I've read. But I think it was the SoftBank approach to investment is that, they have so much cash to invest, like $100 billion, and just like an extraordinary amount of money, and they kind of have to deploy them, and they build up this theory that they would look in these. They would identify an area where there were a bunch of sort of neck-on-neck offerings where they believed that simply adding money would give one company the competitive edge. And then I think they would go to all of them and say, hey, here's this extraordinary amount of money that you would never even dream that you could raise right now. I'm going to just throw it at you. so that you can outspend your competitors. And I think that's basically what happened. And he was, the WeWork guy was someone who took the money.
Adam Neumann. Yes.
It is crazy, and what timing too, just ahead of the pandemic. I mean, Lars, I got a question for you, since you're invested in so many different companies, and I think a lot of people that are entrepreneurs, my wife would be included in this bucket. You could throw her in this bucket as well. She's had a startup that is actually, she's in her 7th year, and it's just starting to hit her stride. The more of the how should I say, the escape velocity point in her business. But when you deal with startups, whether technology or not technology, when do you see companies that do survive, where do they hit their stride usually, where they're like, the product or the service is now proven and starting to make money, and it's really starting to take off? Is there generally a time span within that first 10 years that are is a sweet spot for growth?
Well, so the ones I have in my portfolio, which is, 60 sounds like a lot, but it's a very small sample size compared to how many tech startups are made out there.
Sure.
But I've honestly seen almost all of them. The first time they launch, you can tell immediately that they have captured the imagination of a large group of customers, large relative to the group they're attacking, right? And the ones that don't, in my portfolio, they don't make it, generally speaking. There's still somewhere the jury's kind of still out, including my own startup, by the way. The one I just handed over to a younger team, they're trying to pivot now and finding another route.
Yeah.
But like when you look, if I rank my portfolio according to, paper value relative to how much I invested kind of thing, they all have this property that their first launch really wowed people. And not like there were, millions and bajillions of users overnight, but actually one of them built satellites. So that's a very different kind of user base. Like
that is, yeah. Satellite. And I was say that's a long-term technology that you got to really, that's interesting. Okay.
Yeah. It's funny. I try sometimes to kind of write down like a thesis of investment. This is what I like to invest in. And whenever I try, even in my head, invariably the next investment violates whatever I just written. And so, I don't know how I can barely use a screwdriver. I'm a software engineer. And then this guy came and a young guy in his 30s, and he's like, we're going to build better satellites. And he somehow convinced me that he was going to build better satellites, and they're like $1.5 billion now in value. Possibly also, easy access to capital and so on. But they raised, they haven't launched their first commercial satellite yet. They launched one prototype satellite that kind of proved that their stuff works. And they've raised like $200 million before launching their first actual commercial satellite, which is doing just a few months. So exciting. But they're getting a lot of excitement from customers. This is a very, very different thing from a consumer software product like Canva. But, I think they've sold quite a lot of these already before launching one.
Lars, we have a very interesting question from Anthony, one of our viewers. I'm just forwarding this. Any take on the argument that the anti-competitive takeovers of smaller firms and this way increasing concentration by leading companies stifles innovation? I mean, you're the perfect person to answer that question.
Yeah, well, look, I think for a thriving ecosystem, you need the big players that are exits for smaller players. And I wish there wouldn't be so much, I guess what people call anti-competitive behavior. But I think on balance, having those big players is good for the ecosystem. And you can see that small companies are able to find places where they can overcome these bigger companies. But Canva versus Adobe is a great example. But if you look at Facebook, my former beloved employer, Snap came out of nowhere, started as a startup, managed to carve their tens of billions of dollars worth of niche, right? And TikTok, even more so, right? Like $100 billion company, I think. It's hard to tell because they're owned by this much bigger company, but it is possible. And TikTok started, as a separate thing and grew big and got bought by this Chinese company. And so it's still possible. Except certain things are hard. Like I would not start a mapping startup today, for example.
Completely different environment, of course.
I think it's a little harder now. And actually, it's funny, like you were talking about Google Maps right now. Apple Maps. And one thing I want to say 100 times over, that the Apple Maps that they launched was like 1,000 times better than Google Maps when it launched. It's just that Google Maps had raised the bar so much by then that it didn't. Yeah. It didn't fly, and then they kind of tried stuffing it down people's throat by kicking Google Maps out and replacing it.
I still get so frustrated when whatever app I'm using forwards me over to and I accidentally clicked over to Apple Maps. I'm like, damn it, I didn't want to do that.
I have the same feeling. And actually, there's this conversation. I wasn't unfortunate there, but the guy. When we launched Google Maps, after Google bought our little 4-person company, Google added 2 people to the team. One was a product manager, Brett Taylor, one of the smartest people I've ever known, and he became he's actually like the co-CEO now of Salesforce, I think, and he was the CTO of Facebook for a while. He was actually the one that persuaded me to go to Facebook, but he at some point had a conversation with Steve Jobs about maps. Because it got tense between Google and Apple because of Android, and then Apple wanted their own maps because they didn't want to depend on Google. And I imagine Google tried to say, no, come on, let's be friends. And at some point, Brett and Steve, they had this fight about maps, and Steve Jobs was like, we're going to just do a better user interface for Apple Maps. And Brett was like, but if you don't have the data, and if you don't have the, the search know-how, people are going to not care about the better user interface. And Steve apparently was adamant that the better user interface would win over the not so good data. And I think he was just like the one of the rare cases where he was not quite right about that. I mean, Apple Maps is beautifully well done app. By the way, the Google Maps that preceded Apple Maps was an app built by Apple using Google Maps as their backend data source.
Oh, yeah, wow.
So like we drew the maps and we did all the resolutions of queries and all this stuff, but the actual user interface was Apple's.
I don't think Apple has their user interfaces. Well, actually, let me take that back. I think it looks nice. It is definitely not as intuitive as Google Maps, in my opinion. But anyway, so
I'm not going to argue with you.
Lars, I'm pretty sure, because we have to start another webinar. I'm pretty sure that we should do that pretty soon again, because we still have a lot of questions for you. People really enjoyed your presence with us. And by the way, guys and girls, I have to tell you that Lars has a lot of stories you want to hear about, having to do with tech politics as well. I remember that story you told me, for example, about Taiwan on the weekend.
And started World War III back then.
Yeah. This is one story you want to hear, absolutely, because it's going to give you a good insight of how much intertwined, big tech and politics are nowadays. And we also can further the conversation about what you think is the profile, but I don't want to do it now because I don't want it to be rushed. So you'll give us another date that you are available, and if it's okay with you, we'll have you again. The other thing I would want us to talk about would be, what do you think is the profile of the companies that are going to fail and or succeed following the next bubble burst? So bottom line, if you now had a lot of dry powder, if you were invested nowhere and you had a lot of dry powder, where would you be aiming for under the current conditions and circumstances? So I think that's something that the people want to hear.
Yeah, I mean, look, it's you can already, I guess my answer from what I said earlier, right? That it's the companies that have an appropriate burn rate relative to their market fit achieved so far, right? And companies that have built up like a massive staff and a massive burn rate just because the money was there and in a hot space, but they haven't actually found a market fit yet. Those are the ones I think are gonna.
Yeah. So basically, Lars, going back to the traditional economic model, because a lot of people are unaware, and we'll close with this, but in the past, companies that actually found investors before we go to the era of easy money were companies that the vast majority of them were companies that could already prove that they had a business model that worked. So and actually, then they got money to scale it up at a big extent, right?
So, okay, so yes, but I think it doesn't have to be business model as in you're starting to make growing revenues and so on. That's an awesome thing to have, but you can also just by proving a strong market fit in the consumer space, you will still be able to, even after a crash, right? If you have a lot of engagement and user growth and so on, I think that'll still work. Like a lot of like consumer products grew very like, you know, Google and Facebook are good examples, right? They grew super big without having revenue. And then once they had that user base, they started making revenue. And I'm pretty sure like if Facebook, given its growth rates before it started making money, would have easily raised money even in the kind of downturn that we're about to enter.
Dale, let's find the date for Lars for next month, if that's okay with you, Lars.
Yeah, absolutely.
Okay, perfect.
Okay.
So
Lars, really appreciate you spending your time with us today. It's really nice to meet you, and really quite a pleasure.
Likewise. Everyone, take care.
Yeah,
you too,
thank you, Lars. Very much. Thank you, Lars.
Thank you so much, Lars.
Yeah, maybe we'll meet someday. I dream of going to Greece.
You all should come to Greece, and we'll go on a boat ride together and talk tech. You have to ask me. You have to ask me about the Taiwan story once if we have a little drink, and also the brothel story. Steve, I haven't told you the brothel story.
No, you haven't. So that's something to look forward.
I figures there'd be sex involved in tech, right? Anyway.
Right.
By the way, I don't know what you're doing tomorrow. We're going to the Attica Zoo with the kids. If you want to join us, we'd love to. Speak with Elomida.
Yes. All right.
Bye, mate.
All right.
That's good.
Bye.
So, everyone, the team's doing the morning edge 2 minutes ago. And I want to thank you guys, everyone here, for your attention. Just a reminder, sign up so you can watch the event next weekend live at Trader Summit. Keep, still considering trader funding. And thank you for being here. We left it all on the court for you this week. Hope we added value. That's our goal every week. And we're here to build up and edify traders every day. So have a great weekend. Thank you, team, for everything. And most of all, don't just count your pips, count your blessings. Have a great weekend and happy anniversary, team.
Yeah, happy anniversary. Thanks, Dale. Really appreciate you.
Adios, everyone. Have a great weekend.
Bye-bye, Dale.
See ya. Good job today, Steve. Really nice.
Thank you.
Very good. Very good. All right.
It was a pleasure.
All right. See ya.
Bye.
Adios, everyone.